Welcome to Bitcoin Escape Plan. Bitcoin has been on a massive uptrend over the last few days, but will that momentum carry into the month of May, or is it just the last little gasp of this rally before you see a major reversal on the charts? In today's video, we'll go over all of the key support and resistance levels that indicate this momentum to us, in which direction we actually have evidence for the price behaving at this time of year, alongside the historical analysis of the higher timeframes, just so we have an accurate picture of how those line up and how those are diverging essentially cycle to cycle. And then at the very end of the video, I will go over the best perpetual trade entries of recent memory, and just kind of give an update on my thinking of how I would be approaching using leverage at this time in the market. If you are new to the channel, go ahead and check out bitcoinescapeplan.com. Every Monday, I release an in-depth newsletter that goes over all of the levels that matter the most. You'll hear me talk about a lot of those levels in these YouTube videos. Every Sunday, Monday, Wednesday, Friday, go ahead and check it out, bitcoinescapeplan.com, and subscribe over here. I'm trying to get 1,000. Trying to get 1,000 subscribers. Let's go. Bitcoin Escape Plan. Okay, 4-hour time frame. This is where I like to start. Anyone who is new to the channel, as you know, we always talk about these guys right here. These are the anchored VWAPs. If you don't know what that means, go over here to the courses button. Go click, go watch it. You'll understand. But essentially, what we have been waiting for a while is to get confirmation of either 80.2 or about 83.4, 83.3. That's going to tell us with definitive, evidence. This is the elder VWAP. This is the uptrend elder or anchored VWAP from 2011 to now. This is the downtrend anchored VWAP from the 126 all-time high in October of 26, and essentially just tells us like the volume weighted average of the price. And I think of these as magnets, essentially. If we are approaching that and the charge of the magnet is too strong, we're going to get rejected off of it. If we're able to break above it, it puts us in a position where we're either going to give it back up very quickly or have evidence to go towards the higher bands. Now, me personally, I do not believe that we are going to see these higher bands. Now, there are channels that I watch that have way more money than I do that believe we could go to 90 or 100. It's very hard for me to believe that. I'm gonna go over later in the video why it's hard for me to believe that. But in the short term, what we really need to pay attention to most is this reaction to 79.5K. So on last Wednesday, or not even last Wednesday, I think it was 2 Wednesdays ago, we had our first break up to 79.5, literally to the dollar. And then we had another one the following Sunday where we broke to just below that, 79,490, so just below 79.5. And the chart initially regarded that as a failure. This is also the end of the month, so we'll go over this when we go over the higher time frame a little bit later. But this was a key pivot. It was very important, actually, where the price ended at the month of April in relation to May. And I think what we're seeing now is probably just the last little extension of that move rather than a sincere continuation. That's why it's hard for me to believe that we see 90 or 100. Not impossible, but it's kind of hard for me to believe that. And essentially what we're looking for is we had another quote unquote failure here. Still looks pretty strong though. Wouldn't really consider that like a significant failure, but that's still technically below 79.5. Same with these guys. These haven't even been able to break 79. So I would say that's the prominent point that we want to be paying attention to on the chart in the next day or two. I mean, I'll make another video tomorrow for Monday's newsletter, but essentially what I would be paying attention to today is a reaction to 79, and if we're able to get higher than 79, or if we need to break back down to the 4-hour SMA, which is currently at 77.9. Let's just call that 78K. And as I've talked about in other videos, you should just expect the important levels to be like fairly self-explanatory, like 79.5, 80, 78, 76. Like, then it's not going to be super complicated. Don't get hung up over the exact dollar amount. It doesn't matter, dude. You just need to understand the direction and whether you are buying, selling, or holding, and how you are applying leverage if you are choosing to apply leverage, and also just the context of like the broader stock and equities market. You have to be able to decide where does Bitcoin actually fit within that. No more rambling. All right, so the 4-hour chart, that's essentially, as I said, what we're looking for. If we get if we bounce off of 79K as resistance, we will likely retest the 4-hour SMA. Then all you need to do is just pay attention to the reaction to the 4-hour SMA. That's also in the courses tab. But essentially, I'm just using a 20-week SMA. I don't really care if you use a 50-week or a 100-week or the 200-week. I don't care. Whichever one you use, you need to pay attention to when the price interacts with it. I like the 20 because the price interacts with it fairly often, so probably a lot less than something like the 200. But it does make, I don't know, it makes it easier, I think, for somebody who's like trading and using leverage. You have more data points essentially to understand when it's a good time to get out of your position or stay in it. So that's what we're looking for. Is 79K resistance or support at the moment? What is the reaction to the 4-hour SMA? And again, let's call that 78K. So all you really need to remember is what's the reaction to 79K? What's the reaction to 78K? If we get a strong reaction to those, obviously we're going to head up towards 79.5K again. And then it's the same thing where I think a third failure of 79.5K, which I would imagine we would react to pretty negatively. Or, we haven't really seen, it's still fairly early in Sunday, so we haven't really seen a ton of volume enter yet. At least on the 4-hour, it is contracting a bit, but still like a decent amount of room for expansion, I would say. Although you can see the top of the band there is starting to curve down, so that's a small indication that we could be needing to retest the 4-hour SMA. And then pretty much the only other level below that would be 77.3. That's what I talked about in Friday's video, but we didn't need it. We weren't even close to it. So I would say a reaction to the 4-hour SMA is more likely. So let's go take a look at the higher time frames, try and piece together what is going on. So as I said in Friday's video, we had our monthly close, and now what we would expect to see historically, and I'll explain this real quick, and then I'll go look for historical examples on the chart to verify it. Leave a comment down below if there's like specific other parts of the cycle that you want me to talk about. I know somebody left a comment recently about my 2018 analysis. A lot of times I'm able to like at least get a rough draft of what I believe is going to happen with the price, specifically because I go back and I look at other points in the chart that correlate to where we are now. So what I would expect from the price behaving the way it is now is, if you've been following this channel since at least January, February, I've talked about 76.2K like 4 times a week, every week. I talk about this level. This level is very important. So we saw the price go above it, initially fail it. This is on the monthly. And it was able to close the month just above it, like just barely above it, like what is that? That's 73.31. So we're talking about like $50 above it, which is objectively bullish. It puts us in a position to start this month in a positive way. And really what we have to pay attention to is, do we have historical precedent for this continuing to be a green month, rather than what I see more evidence for? Typically, the wick of this month following 2 candles like this in a bear market specifically. This is not, I'm not going to sit here and fucking tell you that I'm a candlestick wizard. I'm not, but I understand the Bitcoin chart. That's why I have a channel about it. And what I have seen from taking a look at the historical analysis for this type of pattern in a bear market is typically what we would expect is the wick of this month shouldn't go very much higher than this. I can believe that it will go higher than this, but we would ultimately expect the price to end up breaking down at the very minimum below where April closed. So we don't need this, in order for this to be a red candle, we don't need it to close here or here. We just need it to close below 76.3K, which is a low bar. And this is a little bit different probably than how I've worded it in other videos, but that technically is all we would need in order to see quote unquote weakness, is a very small candle, kind of similar to this, honestly, where this initially was not quite validated as strength because of this failure off of 76.2K. It ended up kind of seeming like the month was flat almost, but it set us up for the move in April. And then same thing with April, we got to what could be our high, where it's hard to say at the moment, And quite frankly, I don't think it matters that much if it is exact or not. So for this instance in 2022, very similar pattern, where we had our big drop, a slightly more full candle recovering, had one more that kind of showed a little bit of weakness at that 76.5K pivot, which we can think of as, or 47.6K rather. We can think about that as like a successor essentially to the 76.2K pivot that we're dealing with now, where the price ultimately failed it and then continued below. Whereas again, at the moment we have it above it. So that could be indication that we are actually going higher, not lower, in relation to, we're still very far away from the monthly SMA, whereas in this instance, that was when we broke down into it. So we do expect, and actually I'll make this note real quick before I continue looking for other examples of this. We are in month 5, essentially, 6 now, actually, of being below the monthly SMA. Our historical precedent for that is typically between about 7 and 13 months where we are below it before we are able to break back above it. It is worth noting, this is the last time that Donald Trump was president, and this is one of the shorter times that we are below the monthly SMA. This is also, I think, like 7 months roughly. Now, it is important to note that this is the bear market year. This is the pre-halving year, so they are not the same, and there's no reason for us to assume we're about to see this while we are still technically here, but very, very similar chart pattern here as well, where we saw a breakdown for us in February, whereas this was a rise and then a drop in March, which resulted in higher highs, or higher lows rather, in April. That ultimately wicked slightly higher. So this is the example that I'm giving for this month, potentially, literally to the exact. This is April, this is May, is we could see a wick slightly higher than this one got here. And this actually, I haven't looked at this that closely. This is very important because what they're actually doing is they're failing 10K. That's what's happening in those candles, is the price regarded that as a failure of the most important psychological level. So I talk about this more in my book on the website. The price narrative that I think is important are the really simple ones, are the ones that you can write down on a piece of paper. Where 10K, 50K, 100K, like those are going to be the most important levels because somebody can speak it into existence. It's very hard to speak $5,921 into like everybody's talking about that. Like nobody gives a shit. Even like when I talk about 76.2K and stuff like that, nobody cares, dude. It's still super important on the chart, but nobody actually cares. Nobody cares that the top in March of 2024 was 73.8K. Doesn't matter. But the chart respects it. The chart thinks it's important. So this is kind of what we're looking for is there a psychological level that is going to force some type of major reaction at that point? And I think that there is an argument that there is. So I think 80K is the most important one. We're already showing weakness on multiple candles at that level. So we had the initial one in February where February was not able to get above it. Obviously, we had our failure into March recovery, April rise, and then May. And then this is my scenario 1. This is what I think is most likely, is that we are going to see the candle for May at the most get to 80 or slightly break 80. It is hard for me to believe that it's going to get higher than that. Again, there are channels that I watch who they have a lot more money than me where they believe it could go higher. So maybe I'm wrong. I don't know. But to me, does not look that way based upon the historical analysis. The other important thing to note is we don't have any instances in other bear markets where we have 3 green candles in a row. That's one of the only times we even have 2 green candles in a row. All those other instances are not in the bear market year. It's not a bear market year. We got 2, and then we get failure. And then we don't get 2 again until the pre-halving year. So that's what we would expect in the scenario of a bear market, is typically about 3 or 4 green months total for the year is what we would expect. So it is possible that we get another green one here, but that means we really only have like 1 more for the year. which would mean tremendous downside for the rest of the year. And I think it really depends on how a couple different narratives pieced together. I'm not going to ramble for too long in this video about it, but the important ones to note are definitely the switch over of Jerome Powell to Kevin Warsh by, I believe, May 15th. That I do think will be important. Whatever he says in that press announcement or whatever, like his first meeting, that's going to be super important. That's going to shift the tone for the markets quite a bit. Bitcoin will be one of the first things to move off of that, either positively or negatively. The stablecoins themselves, still, as far as I understand, the liquidity from that is not going to enter the market yet. The earliest I understand is July, but I think functionally it's really like January of next year. So I would really expect there to be more failures for the price moving forward before we actually have our straight up into the right moment. It's hard for me to believe that countdown is already clicking off, where we're not even done the bear market year and we're already going to start the next bull market. It's hard for me to believe. It's not impossible, but it's hard for me to believe. There's a little bit more evidence on the weekly time frame as well, and it's going to show up pretty clearly here. So before I go into this year's, let's take a look at older years to see similar circumstances. This is, I think, the most likely one. This is 2022 as well. And this is March into April. So again, there's a slight 1 month delay right now, but it doesn't fucking matter. You got to pay attention to the pattern of the chart in relation to key levels. So this is very similar. This is a failure of 50K. That's what that means. That's what happened psychologically to the price at that time. So same thing where we had a break above the weekly SMA. In this particular instance, the 47.6K pivot was actually above the weekly SMA, whereas for us, we had the weekly SMA dropping into the level when we had our interaction. Essentially, these candles would have had the interaction right there, which I think for us makes it more confusing, quite frankly. This would have been easier to see on the chart as a failure. I was not as concerned about it then. I was living happy with all my Bitcoin before Celsius collapsed and took all of it from me. But that one in particular, more clear, I think, than the one that we have now. And then the other good example is over here in 2018, where again, very similar circumstance. We have multiple interactions with the weekly SMA versus the monthly SMA. So the weekly kind of just gives us more evidence of initial trend. And as you can see, it stayed below it for a long time, even though it was able to recover fairly quickly in 2019 by the time it broke below the monthly and came back above the monthly. If you look at it from the weekly perspective, it was below it almost that entire time for a very, very long time period. So we want to remember, again, for anyone who's newer to Bitcoin accumulation, the best times to buy Bitcoin is when it's boring. The best times to buy Bitcoin are when we are below the weekly and the monthly SMA, period. Mathematically speaking, you cannot get better entries than when we are below the weekly and the monthly SMA. And again, I don't give a shit if you're using the 50, the 100, the 200, I don't care. Look at the chart, pay attention to whether the price is above or below your squiggly line, and that's what's important, We don't have that much time where we are below it instead of chopping with it or above it, depending again on what part of the cycle we are in. So for our bear market years, the story is typically that we have multiple rises and attempts and sometimes breaks of the weekly SMA that ultimately resolve in failure time after time until we've gotten below the key psychological levels. So in this particular instance, that was, looks like 5K. Yeah, looks like about 5K being half of 10K. And then this actually, I believe, was just, I can't remember if it was banks failing at the time. I forget exactly what caused the last little spike in 2018. Let me know in the comments if you remember. But essentially the failure at 5K caused oh yeah, this was just above. So it was 5. So it's an important psychological level that's going to actually cause that key breakdown, and that is my scenario 1. My scenario 1 is what I think is going to happen. You can already kind of see this by this week is kind of weak. There's still plenty of hours. There's 5 hours left in the week for this weekly candle, but that's not a super bullish candle. This obviously very fucking bullish. That's great. That's great. That is not what you want to see at the top of that major momentum. That means that the sellers have had enough influence to cut out any ability to continue to get higher. So what that says to me is that the most likely next candle is going to start printing lower, to me. Now, I don't know if that's the case, and again, there are people who I watch who are smarter and richer than I am who believe that we're about to see 90 or 100K. Now, also, they have a bunch of fucking subscribers and they make a bunch of money off of people believing in their channel and wanting to be bullish, whereas I just want to fucking help people, honestly. I want people to understand how this thing moves better because I think it's a good use of my time. It helps me understand it better. And I have no reason to sell you that I think we're about to go to 90 or 100K, I don't. Like, it doesn't really benefit me other than it just doesn't. It doesn't benefit me. It benefits me if the price goes down because then I can buy more. I can't buy more if we're rocketing past 100K. You know what I mean? So I don't understand the perspective of those channels where they are just like, constant bull posting. Doesn't make sense to me. Sorry for rambling. Let's get back into it. So what that tells me with this candle in particular is that's a sign of weakness. That's an early sign of weakness. For us to be 5 hours from the end of this candle and we've barely made any progress on it at all, we were able to, when we broke below the weekly SMA again and broke through the 76.2K pivot, we were able to fight back above that. So you can view that as bullish. You can view that as a bullish signal. However, all of the other instances that we have where we're touching the weekly SMA, we don't have a significant period of time where we are interacting with it. It's like 3 or 4 weeks. Actually, 2014 is more. 2014, I believe, is like 10 or 13 weeks, but it's harder for me to believe that's going to be the instance. We can go look at it just to see it. But it's harder for me to believe just given the reality of how different the market is now. Like, we're talking about a time where Bitcoin is like not taken seriously at all. I don't remember if this is pre or post Silk Road. Probably post, I guess. Probably post Silk Road. So people are using it to buy drugs on the internet. Like, it's not what it is today. It's not a global layer of settlement for governments as it is going to be today. It's not like the US military is talking about the cryptography aspect of it. They don't care about the price. They care about the cryptography behind it. Like, people don't understand. Anyone who's betting against Bitcoin is a fool. You can make a lot of money shorting it if you know what you're doing, but to say that it's not going to continue to go up forever, you're silly, in my opinion. So June of 2014, the IRS makes the ruling that Bitcoin is now a commodity and is legally properly in the United States. This is super important. You would think that would be bullish news. It is not. It runs the price down immediately. So very similar, where this is the only instance where we have a prolonged period above the weekly SMA during a bear market. So it's possible that is what we could see now, is we could see the weekly SMA stay above it. You can see the same thing. This still struggled with key levels. It looks like that level was about 700-ish. 600, 700, 600, I guess, is the one where it started to struggle. So it was able to get to about 600, and then it just had trouble at that level, and then eventually broke down and continued to give it up. So for us, in the modern day, what we need to pay attention to, really, I think is 80K. 76.2K, super important. But 80K, this older pivot, where that's where these wicks went to and slightly broke back in the middle of 2025 when we had that drop, which I think is super important. I think that there are 2 points on the chart that actually give us so many clues about how the price is going to continue to behave. And that is the drop in 2025 and the initial rise in March of 2024. I think both of those instances are very indicative of how the price is going to behave from now on. There are going to be periods of time of volatility, but they're not always the times that we're used to. This one in particular in March of 2024, that had never happened before, where we hit a new all-time high prior to the halving itself. It is not uncommon for by the end of the halving year for there to be a new all-time high, but this was uncommon for us to create a new one. And I think part of that was just because Nobody gives a shit about 70K. 100K was the important level. So I think that combined with the Trump presidency announcement, that like really gave us that rush to the important psychological level. And then we just didn't have enough momentum to keep going. Like in 2017, the important psychological level was 10K. And we had enough steam, and it was still a small enough market cap that a small enough money could move it, that we sufficiently got to 20K. But 20K doesn't matter. It doesn't matter. The important psychological level, as the chart dictates to us, was 10K. That's where the major failure occurred, you know. So essentially, that's what we need to look for now. Is 80K a sufficiently strong enough level where we're either able to build support and therefore invalidate this scenario one? Now I'll get into scenario two. If we are able to start to form support at 80K, that gives us an instance where we're going to have to head towards specifically 86, and then 96 is also going to be super important. Now for me, what I am paying attention to on the chart is this anchored volume profile here, which is basically the way I think about it is these are living, breathing human beings on the other end of the buy and sell button that have strong opinions about the price of Bitcoin at those levels because they bought it or they sold it at those levels. At the current levels, from about 72K to about 86K, there are just way less human beings that have an opinion about these prices, that care about these prices, as defined by the chart. You know, this is not me like I'm only reading what this tool is telling me, you know. So this is all people who, in my opinion, and this is not an insult, but this is people who have probably not less conviction necessarily for Bitcoin, but probably less education for Bitcoin, as opposed to these people and lower. These are people who have been in Bitcoin for a long time, for a very long time at this point. And even these people, this is a lot of the ETF buyers, a big bulk of the ETF buyers during that time. And a lot of that is actually centered around kind of the midpoint of that range. So we were able to get a pretty healthy accumulation for that. So that may be one point of evidence for this scenario too, where we do continue to go higher, is maybe that's enough volume. Maybe that's enough volume where we don't need to, where the people up here do not feel a pressure. And this is the way I think about it. This is your 76-year-old grandfather who has an IBIT ETF in his retirement and doesn't have a strong opinion about Bitcoin, but he knows he's supposed to have an allocation to it because his manager told him to or whatever. This is people in their 40s or 50s who like have like a bunch of 401k money already, and you know they start allocating a portion of it to Bitcoin. This is people who are not custodying it themselves, so they don't have a strong opinion about holding it forever while the stock market is rising, while the real estate market is rising, while oil, energy, while all of that's rising. Their first thought is not Bitcoin, you know. So I think as the price goes higher, I'm going to be paying attention to this. I'm going to be paying attention to, does this start to thin out? Does this start to thin out? The people who bought at these levels, do they start to get out? And do we fill here? Or do we see mostly sell pressure here? And that's going to push all the volume of the human beings that have strong opinions about the buy or sell button. It's going to push the weight of that down, which is not a terrible thing long term. That's going to build us strength the same way that it did in this instance. You know, the fact that this was able to get so bought out was what allowed us to get those strong rises. That can happen very quick, and that's why there's big gaps. And that's why we see a big gap here, is because of this, because of how quickly we rose during the initial Trump presidency. It was like no one could think about it. No one had time to think about it. So that's why I think 80K is super important, because that's kind of, we got candle closes slightly above that in the drop, and then after a failure at about 90K. And again, this is going to be, a lot of these levels are simple. You know, you can write them down on a napkin. They're not hard to remember. When an asset has this many zeros in it, the numbers that matter are 50K, 60K, 70K, 80K, 90K, 100K. Not complicated. You know, like you really have to keep that in mind, that sometimes it is simpler. And I think structurally speaking, what we are paying attention to now between either scenario A or one, whatever, where we more likely form resistance at 80K and then start to transition back, at first, we will need to retest the weekly SMA, which is currently sitting at about 76.6K. And then, of course, the Fibonacci pivot is directly below that. This is actually important too. I'll go over this more in tomorrow's video because we'll actually see what the weekly SMA does in reaction to a candle above it. I do still think that this candle is going to close above it, but it's just not super bullish. So we don't know if the weekly SMA is about to curve pretty hard and flatten out, or if it is just going to break down through this. But essentially, the next time that we interact with both the weekly and the 76.2K pivot, I think it's going to be pretty important. Like it's going to tell us kind of definitively, okay, do we need to break down back into this range, or are we attempting to break out of this one, which is a much tighter range between 76.2K and 80. There's a lot of pressure on this range. And again, not that many human beings with a strong opinion about it. And that's what you need. That's what you need in this instance, is a ton of human beings to have strong opinions to be able to get it above 80, or it's just more likely that it's going to fail at 80. But just for playing devil's advocate, what is scenario 2? So scenario 2 is we close where we are, and next week we open strong and we're able to bust through 80 pretty quickly. That would give us the ability to rise as high as 83 or 86. Again, we're going to want to pay attention to, on the 4-hour time frame, the anchored VWAP will tell us pretty clearly based on an interaction with 80.2K and 83.4K. It'll be fairly obvious, the same way that it was when I was talking about it in this range over here and over here. It'll be fairly obvious on the chart. So for the weekly, that's kind of what we need to see in 5 hours time, is does this candle close in such a way that it invites downside momentum to start off the week, which again, for me, that's the most likely, not guaranteed, but that's the most likely when we had all of this significant volume just continue, and then that's what we get at the end of it. Come on. Like, it looks kind of like a reversal, same as this, where we had all these red candles in a row, and we got a tiny little one, and then we got a reversal. Now again, not a candlestick wizard. You correct me down there if you know this pattern better than me, but to me, that's what it looks like, is we're probably gonna get a failure. Even if next week starts and it wicks above it, I would still expect that there's gonna be downside pressure in this coming week. And that's what we need to pay attention to, specifically the weekly SMA and 76.2K. And I'm just thinking about it, historically speaking, this is historically the time period, almost to the week, where we would expect to see weakness of a key level. And I think 80K is sufficiently a key enough level. I think specifically because we had an interaction over here, it's pretty important, like it's not hard for the price to register that as quote unquote familiar territory. And it's just an important psychological narrative moving forward. Is that support or is it resistance? Is this a ceiling or a floor? If it's a floor, cool. Then scenario 2 is on, where we could see a rise to that 96K pivot. I have made the claim that I don't think the price is going to go higher than 97.9K this year. Where the hell is that candle? Is it this one? Where are we? I don't think so. Sorry, my brain is melting at the moment. Or I just can't see the... Why is it not updating? It's not updating the time frame. I guess that's that one. So it's this one. I don't know why it's not reading properly, but yeah, 97.9 in January is kind of, for me, I think that's the highest that we're gonna get. Mostly just because of the, if we think about it from like a narrative, if I'm a news station, right, and I can only run one story the whole year, I think the story for 2026 is how low can Bitcoin go. I think the story for 2027 is, can Bitcoin break 100K, or will it break 100K? Because that's all they were talking about last year, was how it's never going to go below 100K again. It's never going to go below 100K again. Oh shit, it went below 100K. Whatever will we do? Like, you got to think about it in terms of that. That's why I think like the liquidity doesn't really come until you're getting flyers in the mail that you're throwing out from JP Morgan Chase and Citi about you using your stable coins, about the bonuses you can get if you get more stable coins. When that happens, that's when we have our major liquidity rush, And I think until then, it's just going to be a bunch of fake outs, So I'll keep this short because I rambled for too long, but looking at the perpetual trades, I did close my long. Technically, I did not need to. I closed it somewhere around here because I was starting to see weakness there. And I'm more focused on, I want to have my money ready to react off of the levels that I mentioned. I want to have my money ready to react to 80K or 83K because it's either going to continue up from that, in which case I'm probably going to miss most of that, unfortunately, or it's going to be pretty clear that we have a negative interaction with it, and I want to be ready to short at that time. So I'm not in a short now. I was in one to protect against my long at this point. I was incorrect about that. I did lose like $60 on that or whatever. And then I had a small one yesterday that I also got out of because it just didn't, I think I caught it like here. And yeah, I just did not have the patience to like sit through the day. I was more focused on not looking at the chart yesterday. And that's kind of the reality is like you can take trades whenever you want. That's the beauty of a 24-hour market. You can take trades whenever you want. What I have learned and what I talk about typically on this channel and in my membership group is these 4-hour candle breaks of the Bollinger Band, either below or above, are your best entries. They're your best entries. And that's separate from, if we're talking about, again, like I said earlier in the video, for accumulation specifically, for dollar cost averaging and accumulating more Bitcoin over time, all you need to worry about is the price above or below the weekly and monthly SMA? So this, but on the weekly and monthly chart, essentially. The same can be applied to the 4-hour if you're adding positions, is you want to add positions when we have breaks of the 4-hour Bollinger Band that are expressed as being on the opposite side of the SMA. Now you can use the SMA as one of your exit, requirements or like criteria essentially. But from my analysis of this strategy so far, in terms of probability, there's about a 70 to 90% probability that when we see, it is specifically this type of candle where we have two that are kissing each other like that are outside of the Bollinger Band on either side. That, in what I've seen, and I've probably back tested this for the last like 150 or 200 scenarios on the chart for this, we typically see at least a 1% move in the opposite direction. Now it does not always continue, like this one, for example, this one went just under 1%, and then it went in the opposite direction. So there are times where it's just a scalp trade, where it's not, you shouldn't expect a continuation necessarily. And in this particular instance as well, like you would have had a short period of time where you could have been in profit, technically a profit a couple days later, and a lot of profit a couple days later. So sometimes we have to accept in this particular pattern where it continues to chop and break downward. This is actually an instance where you need to continue to add to the position and just trust that what the chart is telling you. And this is where it gets complicated, specifically with leverage, as well as you have to know your history to be able to do this properly. That's why I do these videos in this format, where I talk about the history and everything else before I really get into the trading aspect. And there's probably like 4 of you that are still watching at this point. Thank you so much. You really, these types of positions where you are adding during a breakdown, or even here, this is the same example. So, where is the right time to short here? Here. But, you could have been scaling into this. You could have bought a short here, and then the rest of your shorts here, and your average price would be like somewhere over here or whatever. But that's still plenty of profit. That's still quite a bit of profit, even if your average price is here. That's 30% on your money, 40% on your money. It's very, very good. So typically speaking, you want to just look for evidence of, in this particular instance, we didn't get a long entry here, but we got another short entry. So you could have been building your short position pretty substantially throughout this whole point and this whole point, and got paid 30, 40% on it, and then wiped your hands of it and moved on. So in this particular instance, we are still in long territory. Those have been our most clear entries recently. We had a short one here that, again, just barely, and if we go from the candle itself, didn't even quite get us a full 1%, just under. Technically, you could have taken a 1%, but as I said, again, like a 70 to 90% probability that when it breaks the Bollinger Band either to the top or the downside, and especially when it's these two candles, the probability probably goes down when they're staggered. Like it's not quite as clear cut in that instance, though. Same thing. That's correct. That would have been a long. Both of those would have been a long that you would have got paid on. So that's kind of what I like to look for with that, is being hyper specific on my entries. And the only time I've really lost money with these perpetual contracts, which I got to be honest, I've lost very little money with these, even when I'm wrong, compared to like option contracts and memes where I've lost a lot of money, like thousands of dollars each, that I'm not stoked about. Whereas the perpetual contracts, it's hard to lose money. If you take good entries, it's hard to lose money. So that's what I'm looking for at the moment. I'm not in any trades. There technically is nothing wrong with the long that I was in. So if watching this and you are already in a long or still in a long, obviously it depends on your cost basis. Everyone's circumstances are different. But say that you did buy in a couple days ago, or if you were earlier in the range, there's technically no reason yet to close the position. I had made enough on the trade, and I want to be ready for the next trade. You gotta be able to make that decision for yourself if you want to be able to wait through all the anxiety of being in a position. I was in that position for like 7 weeks, 8 weeks, and there were multiple times where I could have got paid considerably more than I did, and I didn't cut it. So I think there's one little last chance that we see a break above, but again, that's going to be based on the levels I talked about earlier in the video, where we have a reaction to 79K that is favorable and brings us above 79.5K and 80. However, I gotta bring in the realistic context of the weekly time frame, where we got just under 5 hours for this candle to close, and that is not, I would not expect to see another green candle after that. I would expect to see a reversal, which that's our most recent instance of that, where we have a ton of red candles in a row, followed by a tiny little green candle, and that's what gave us our momentum higher. This is a ton of green candles in a row, and technically I guess we would want the inverse of this. We would want that to be a tiny little red candle instead of a tiny little green candle. Still 5 hours left in the day, so it's still possible that we start to get more downside pressure. I think the only thing that would really cause that is weakness here on the 4-hour SMA, which maybe we get that. Maybe we get that on the hourly. Maybe we start to see a breakdown there first. It's looking kind of flat right now. 15-minute is getting a lot tighter, so we could be about to see a major expansion. So I guess if you're really like, looking to trade today, that's probably what I would pay attention to. Is this is a big point of compression right now on the 15-minute that I would imagine is going to resolve probably within the next couple hours. Again, I don't know if that'll take all the way to the end of the week in 5 hours, or if we get that closer within the next hour or two. But if we lose that 15-minute SMA, then that's going to put pressure towards the 1 hour. 1 hour being at 78.5K, which we have definitely chopped around quite a few times in recent memory. So let's see for the daily pretty much same story. Yeah, I mean, I'm not going to say that that's bearish, but it's definitely not good to see a tiny little candle like that after significant upside. Like, look at this guy. This is the same thing. So we had significant upside for multiple candles in a row. Tiny little green candle. What happened to the next one? It went down. Now, in this instance, of course, it went back up. So it's not like a guarantee that it's going to break down and continue to break down. But that would be another instance where it's going to get pulled back to the daily SMA at some point. And I think that's primarily going to be the weekly time frame that we see that confirmed on. Is once that candle is closed, we'll probably see pretty early in the week where the momentum takes it. I would imagine it's going to take it down, but we'll see. That'll be regarded specifically as a failure of 79.5K and 80K. I'm going to stop rambling now. I will talk to you tomorrow. Let me know if you have any questions down below. And I'm trying to get to 1,000 subscribers, so help me out. Send it to your friends. All right, Bitcoin escape plan. I'll talk to you tomorrow. Have a great day.